I would like to introduce the session and the speakers to you. So as a little bit of context, why we're doing this fourth session here on the issue of greenwashing and sustainable finance is, as you might know, sustainable finance is a big topic that has grown over the last, say, 5 to 10 years quite a lot. You have now trillions of assets, I think by the most broad estimate, about 32 trillions of assets under management that are somewhat sustainable, but the meaning is still, of course, open to interpretation depending on a variety of factors. Now, the EU has been very, say, ambitious and very early mover in trying to get a common understanding through the high-level expert group, which was followed by an action plan, and then especially the taxonomy regulation and the platform that we have now. 2 participants here also, and 1 person who was very instrumental in bringing all of this, and whom I'm very happy to have here with us today, is Martin SPOLC, who is the head of unit of the Sustainable Finance Unit in DG FISMA. And then the other 2 discussants that we have here have also been working a lot on sustainable finance with regards to the European Commission and Union's action on that. So first we have Aleksandra PALINSKA from Finance Watch, who has a lot of experience prior to joining this in the asset management sector and EU kind of financial regulation policy affairs, and who is an advocacy officer and research officer at Finance Watch, which represents civil society interests and tries to get us to have a financial system that serves the people and the planet. Then we have Dr. Van Allen, who comes from the Institute for European Environmental Policy, the IEEP, and is there the research director and member of the platform Sustainable Finance, and has been working in the technical working group that kind of sets the criteria that we use to then classify sustainable finance through the taxonomy. So now, without further ado, I would give the floor to the main speaker and the 2 discussants, and afterwards we will open the floor so that the discussants and speakers can debate among themselves, and then later on I will also open the floor to you for you to give comments and questions. So that far from me, and now I'm going to head over to Martin and share the presentation.
Thank you very much, Andreas. Good morning. Many thanks to you, Andreas, and also Said for the invitation, the opportunity to talk to you today, and also in such a great company of Ben and Aleksandra. I have been asked to give you an overview of what we have been doing as not only the Commission, but the European Union to combat greenwashing in the context of sustainable finance. And you mentioned that we already started quite early. And here I would like to recall that back in 2018, we adopted the first action plan on sustainable finance, where we have clearly articulated the risks stemming from greenwashing. And because, the word was kind of new and, it was used by everyone, we also felt the need to also clarify what we mean by greenwashing. And the way how we have at least done it, or how we did it at the time, was the following: the use of marketing to portray an organization's products, activities, or policies as environmentally friendly when they are not. So I think that the framing that you have presented, is a very good one. There is obviously a boost in sustainable finance, in sustainable finance products, but it is obviously now the role also of policymakers and regulators to bring some order and to bring credibility and integrity into the framework. And not only when it comes to the regulatory framework, but also in the way how the rules are being implemented in practice. And I will tell you in a minute, what we have done so far, what we are doing, and also what we will do in the future, because this topic is obviously a kind of long-standing priority for the Commission. So if I may ask for the first slide. With this 2018 action plan on sustainable finance that was presented again in March 2018, we really wanted to lay out and lay down actually the foundations of the EU sustainable finance framework. We defined 3 main objectives: reorienting capital flows to make sure that actually the sustainable finance actually really can grow, that we scale up sustainable finance. The second objective is to make sure that the financial sector itself is sufficiently resilient to the risks stemming from climate change and environmental degradation. And finally, enhancing transparency. That was the third pillar. Now, the way how I presented it on this slide, for the sake of simplicity, is basically based on three key pillars. The first one is EU taxonomy, which is really in the heart of our policy so far, and it's really maybe one of the most important actions that we have taken so far, because this framework is supposed to define what is good, how and what is good, and that would be ultimately aligned with the European Green Deal targets. So how good is good enough, essentially. With this EU taxonomy framework, we are defining criteria that determine basically the requirements that a given economic activity must meet in order to qualify as being aligned with the European Green Deal targets, and also when it comes to the climate to 2050 and 2030 targets. The second element of the approach has been disclosure. We have found out that there is a problem with transparency, that many stakeholders are claiming that their products are sustainable, but there is absolutely no clarity on how they have reached that conclusion, and not only how they have reached the conclusion, but also about the impact that these products might ultimately have. So for that reason, you see on the slide that we legislated on this front. We made a proposal for the so-called Sustainable Finance Disclosure Regulation that was already successfully negotiated, and obviously now everything is being put in place to apply it already as of next year. The third element of this approach has been developing appropriate tools. And here I'm not necessarily talking only about tools that would be necessarily only based on taxonomy, but tools that can really facilitate the scale-up of sustainable investments. Just to give you a particular example, the EU climate benchmark, where we also decided to regulate, was yet another example where we have seen that in the markets there have been market providers or index providers that have been claiming that their indices are fully aligned with Paris goals, but when you actually looked into the details, it was not the case. So we wanted to establish some minimum integrity and credibility into the system. As part of these tools, obviously, we are working now on the European Green Bond standard. We are working on the eco-label that would also bring integrity and credibility into the system from the point of view of retail investors. Next slide, please. Now, we have done a lot, and I have to say that the progress that has been achieved, and not only thanks to the Commission, but thanks to many stakeholders, has been quite impressive. But at the same time, the time has moved and the context has changed. The context has changed in two ways. First, now we have the European Green Deal as the top priority of the Commission, and accordingly, we had to also scale up the ambition of the file. And second, unfortunately, due to the crisis, and we had to basically now assume how, or present some ways how the recovery phase can be better combined with the sustainability agenda that we have been pursuing. So the European Green Deal and the recovery context, and I would say also the global dynamics, has really contributed a lot to the decision to present a new vision on sustainable finance. We presented this new vision on sustainable finance in July earlier this year. We call it Renewed Sustainable Finance Strategy. And while we are obviously not abandoning all the progress that we have done until now, all the three elements that I presented are still extremely important, and we are still working together with stakeholders to make them operational. We identified gaps in our approach, where we identified actions how to address those gaps. I will not go into the details because we have obviously limited time, and we are focusing in this session on greenwashing. But let me just say at least a few words about what these four key areas where we identified the gaps are. The first one is financing the transition. Many stakeholders argued that while it's obviously appropriate and the right thing to do to focus on defining what is sustainable, stakeholders argue that we need to do a better job in identifying frameworks and tools that would support all stakeholders on their transition pathways, in particular those that are facing significant difficulties and that who are having particular challenges on their pathways. The goals are the same, and everybody has to meet these goals. And these goals obviously should be science-based, but there might be different pathways how to achieve those goals. And we are trying now to identify several policy actions that would recognize the different starting points of different sectors, of different geographies, of different stakeholders, and accompany and support them with appropriate tools and frameworks. The second pillar is inclusiveness, making sure that this agenda is really successful in embracing investors, retail investors, SMEs, businesses, and that they see this as an opportunity. But again, for that to happen, we also need to have a very credible framework. So I will say now in a minute what we are doing in this area. The third area is resilience, making sure that the financial sector is resilient to any future risks, that there will be risks, there will be impacts, there will be a future crisis that will also interact in a very nasty way. And we need to make sure that individual institutions, individual investors, but also the system overall is resilient enough. But the second part of this narrative is that the financial sector itself has to contribute to meeting the targets that have been defined by the European Green Deal, but they have to contribute, in a credible way. So we are, of course, very, very happy to see the pledges and the different commitments that the financial sector is taking forward, but we do need to make sure that these commitments and these actions that as they are presented are credible. And here, I will have a separate slide that will show you what we have done in particular in this area. And finally, I mentioned already a new kind of increased dynamics on the global fora. And here we use the strategy as a testament for what we believe in the European Union should be done at the international level, not only in terms of convergence, but also when it comes to supporting emerging markets and developing countries. Next slide, please. I already mentioned the transition. Maybe here, because we are talking about greenwashing, I also would like to emphasize that so far we have focused on standards and labels that would be fully sustainable. And here, obviously, we need to make sure that there are very strong links between the standards and labels with the EU taxonomy, which is currently the most important tool, not the only one, the most important tool that would define what is ultimately sustainable. But as part of this work, we will also explore whether we might need to explore other standards and labels that would accompany and support stakeholders on their transition pathway. The second element I already mentioned, the inclusiveness, making sure that retail investors, SMEs have better access to sustainable finance. But again, in order to happen this in a successful way, we need to introduce credibility into the system. And that will lead me to the next slide, where I will tell you a little bit more. When we talk about sustainable finance, we were very clear to everyone that we are not talking only about the risks that climate change and environmental degradation would pose on the financial sector, but we are also talking about the impact. And if stakeholders are arguing that they have a positive impact on environment, on climate, it's really crucial that they also disclose how they do that. And we are pursuing this approach not only when it comes to the financial sector, but also when it comes to the businesses, because ultimately the disclosure by the financial sector is determined and predetermined also by the disclosure by the corporates. So we are pursuing this double materiality approach in everything what we do, but in transparency in particular. Next slide, please. I already mentioned the resilience. I will not repeat it. I already mentioned the contribution, the alignment of the financial sector to the targets. Here, we are very appreciative of all the action and commitments that the financial sector is making. But here we also are reflecting on whether we might need, as the European Commission, to provide some guidance to those stakeholders who are making those commitments, again, to make sure that these commitments are credible and ultimately also are implemented, accordingly. Action 5 is the one that actually I would like to focus most, because that's the most relevant for this particular session. I mentioned that we have done already a lot in terms of regulatory framework. We have done a lot of regulation. I mentioned the 3 examples: taxonomy regulation, the financial disclosure regulation, now also the climate benchmark regulation. We are now working and negotiating on a disclosure by corporates and the proposal on the European Green Bond Standard. But in the strategy, we have recognized the fact that in order to combat greenwashing, it's not necessary only to have these laws and these rules, but we really need to understand how these rules are actually effectively implemented on the ground. And here we have clearly committed to go deeper into those issues, especially in light of the context where we are, where there is an enormous growth of those financial products that are having some sustainability features. And we have proposed the following action. Next slide, please. I will not read what you see on the slide, but basically we have committed to do three things. We have committed to ask the ESAs to monitor any greenwashing risks that they might observe in the market. That's really very fundamental, because so far we have really not had any structured way how these greenwashing risks will be monitored. So the ESAs now will have a very specific and explicit role to do that. Then we will also ask the ESAs, the European supervisory authorities, the banking authority, the insurance and pensions authority, as well as the financial market authority, to assess and report to the Commission whether the current supervisory and enforcement toolkit actually is fit for purpose. And as a third point, it's nice to monitor, it's nice to assess and report, it's nice to have a report, but obviously what matters is ultimately an action if there is a case for taking an action. And that's why we have also committed that we will, as the Commission, make it clear whether further steps are necessary to enable supervisors to ensure a sufficient and consistent level of supervision and enforcement across the EU. So those of you who are interested in more details, I encourage you to read the strategy, and especially Action 5. I think specifically Action 5A deals with greenwashing. Next slide, please.
Could I ask you to slowly wrap up then?
Yes, absolutely. That's exactly what I'm going to do. Please skip this slide. I think that it would be very incomplete if I don't mention the importance of taxonomy regulation. And here I mentioned that the taxonomy is there to provide clarity to stakeholders what is actually substantially contributing to environmental objectives. But taxonomy is a fundamental tool to help stakeholders also to measure progress and to measure where they are today, but also to measure and even plan progress that needs to be done over time. And taxonomy has a big advantage because it is a very objective tool. It really tells you how good is good enough. And so it's not simply good enough to say, look, I have a sustainability feature in my product and I'm doing something positive for environment. Taxonomy is the yardstick, is the kind of objective measure that allows stakeholders to measure progress against something that has been calibrated on the basis of science and against the objectives that we have defined. I'm very grateful for all the work that our platform on sustainable finance is doing. I mean, Ben obviously is the leading rapporteur on the taxonomy together with Marcia. And we are very grateful for all the work that the platform on sustainable finance is doing and making sure that all the criteria that ultimately will be submitted to the Commission will be as science-based as possible. My final slide, if I may, actually my final two. You know that when we talk about taxonomy, we don't talk only about climate change. We already adopted the first climate delegated act as the Commission in June. We are now waiting for successful scrutiny by the co-legislators, but currently the platform on sustainable finance is working on the other 4 environmental objectives that are equally important, and I hope that they will be processed very quickly. And my very final slide, if I may. This is just to show how impactful the taxonomy can be and how important it is to actually facilitate transition of our system. The current climate delegated act that the Commission adopted and that also the stakeholders helped to develop is covering 80% of direct greenhouse gas emissions. And as I mentioned, it is the objective yardstick against which the progress on the transition pathways to climate neutrality should be measured. So colleagues, I thank you very much. I think that I will conclude my presentation here. I mentioned that we are working currently on the 2 other proposals, the European Green Bond Standard, that should also bring transparency and credibility into the system of green bonds, as well as the corporate transparency. There are 2 additional slides in my slide deck that I will be very happy to circulate after the event. Thank you.
Okay, thanks a lot for the great presentation, all the updates. So without further ado, I'll hand over to Aleksandra, our first discussant.
Hello, everyone. I hope you can hear me well. It's a great pleasure to be here. and have the opportunity to react to, well, the great presentation by Martin, showing that indeed, well, the Commission is doing really a lot on sustainable finance in general, and trying to prevent greenwashing, which, as I think all know, is still unfortunately at times happening in the financial sector. Well, as Andreas mentioned, I work for Finance Watch, which is an organization with a mission to make finance serve society. And one of our core objectives is also to ensure that we have a financial system which is stable. As presented by Martin, a lot is being done to improve the transparency of corporates and in the financial sector. We are supportive of all these regulatory developments. Transparency is very important, but it is no substitute for real action to change corporate behavior, improve corporate accountability, and the resilience of our economic and financial system against the increasingly materializing sustainability risks. Probably you're wondering why I'm talking about that, and in a second, I will go back to focusing on the core issue of greenwashing. But I just wanted to mention that Finance Watch very strongly believes that a successful sustainable finance strategy needs to be based on the 3 key pillars, which is transparency, governance, and the risk-based approach. And while overall we welcome the Commission's strategy for financing the transition to sustainable economy, and we believe that there is really a lot of great progress and ongoing and upcoming initiatives. However, there is in particular one particular thing on which we think it is actually missing from the strategy, and which is essential to ensure financial stability. This is actually, the risk-based approach, meaning integrating sustainability into the risk management. Probably you will wonder, well, there is an entire chapter and the section on the risk management and how to incorporate it into banking, also to some extent, in the in the insurance industry. But in a way, what we feel is actually that the actions are too much delayed in time, and giving, like everything what is happening, we need something much faster. We need actions which are going to be imminent, something we can already do now. I mean, the reports of scientists are, we have more and more evidence actually showing that unless we change things quickly, it might be actually too late to save our environment, our societies, and our planet. Therefore, one thing on which we were a bit disappointed with regards to the strategy is that we believe that now the opportunity of revision of capital requirements regulation should be taken in order to incorporate new specific risk weights into actually capital requirements for banks, and also taking opportunity of the Solvency II review for the insurance companies to properly here represent the risks connected to the fossil fuel investments. Now, coming back to the core subject of this discussion today, as mentioned, a lot is being done on transparency, on improving disclosures, both in the financial services sector and of corporates, and we are very much supportive of all these developments. Finance Watch is also part of the platform on sustainable finance, where we are trying to help develop, in particular, social taxonomy, which we believe is very important. We're, of course, also very supportive of further extending the EU taxonomy to include other objectives and, other basically activities, looking into also significant harm, etc., etc. But what I just wanted to mention here also today is that there is also overall one piece which we think is also missing from the entire transparency/disclosures here sustainable finance agenda, and this is sustainability or ESG standards for financial instruments. And here again, some of you might ask me, why are you talking about it? We have sustainable finance disclosure regulation, which Martin has just mentioned. We have the EU taxonomy. Why do we need something else? Well, the tricky bit is, of course, taxonomy is great. We hope it will work very well. You will have the percentage showing, the percentage alignment of a fund I would say, with the taxonomy, which will be an indication of how green it is. Of course, we will have, EU green bonds, hopefully one day, through the EU green bond standard that will be aligned with the taxonomy. Hopefully one day we will also have maybe EU eco-label, and we have the Sustainable Finance Disclosure Regulation, which creates more transparency on how sustainable funds are. But the problem is that, like, in a way, what we need is something that puts all of that, together and ensures that whenever funds or other financial instruments are sold and marketed as sustainable, they need to meet certain minimum requirements. So a little bit like the EU eco-label. However, the problem is that the EU eco-label is confined only to retail investors. And also there has been quite a bit of controversy in terms of, how it's being, formulated. So in a way here with SFDR created the so-called Article 9, which is the dark green products, and Article 8, which is the light green products. Okay, so the first are sustainable investments, and then Article 8 is products with ESG characteristics. And it has been already observed that the market started to create a kind of a standard out of it. But the problem is that there are no thresholds. So for instance, for Article 9 products, there is an obligation to disclose, or there will be soon applying obligation to disclose the percentage alignment with the EU taxonomy. However, the problem is that you have no threshold set. So pretty much it can be 0% alignment. And actually, as this regulation already applies as of March, and some data has been, gathered on how markets are adapting and adjusting, based on the data from Morningstar, and actually some have already performed analysis, including Capital Monitor, showing that actually, quite scary figures that, for instance, in some cases, there were Article 9 products with, for instance, fossil fuel investments, or, and a big proportion of Article 8 products to that end. And so the problem is that, yes, we have a lot of developments, but we need to kind of put all of that sort of together and create something that will ensure that investors, including institutional ones, will have clarity on what is really sustainable or not. So while of course taxonomy is great, it's groundbreaking, and definitely we fully support it, but we think that on its own it might not be enough to ensure that we can properly prevent greenwashing in the markets. So I'll leave it here for the moment. Thank you.
Great. Thanks a lot. For the overview. I'm sure we can discuss the very technical details also later on if in the reactions. Then I'm just going to hand over to Ben for his intervention.
Thanks, Andreas, and thank you, Martin and Aleksandra, for those interventions. I've slightly modified what I was going to say because actually you've both covered some of it. What I want to bring to the discussion, and I will be brief so we get into some discussion, is the environmental ambition question and the scientific basis for that ambition, and why that's so important in this decision-making process, both to prevent deliberate and accidental greenwashing. This will be a bit more granular, and it's into one of the tools that Martin's mentioned already. So other speakers have used this term sustainable, both in the title of the strategy, in the need to finance sustainable growth, in terms of what do we mean by sustainability. I want to focus on that question specifically. What does sustainable actually mean in this context? How do we make judgments about sustainability, particularly when looking to avoid greenwashing? This is a really live question that we're dealing with in the platform on sustainable finance, and when putting together the criteria to address all 6 environmental objectives of the taxonomy regulation. The taxonomy being one of those underlying pillars of the strategy itself, as Martin said. We've had to deal firsthand with this question about loopholes, questions about what is enough to demonstrate sustainability, how good is good enough. That's been one of the underlying questions that we've had to wrestle with. Now, sustainability can be defined, and it can be subjective, and it does mean different things to different people if not further defined. And I guess that's the whole point of this discussion and why we have the EU taxonomy. But it's really important to be clear that when we talk about preventing greenwashing, there is and are environmental sustainability goals to the taxonomy itself, amongst other goals, and that this environmental sustainability is de facto a recognition of the EU's Green Deal environmental objectives and our international commitments, such as the Paris climate targets. We already know there's a huge investment gap, something like 260 billion euros to reach these goals. So we can't really afford to have those finance tools labeled as sustainable if they're not genuinely delivering for those stated goals. So one example of why that's important is when we talk about economic activities and financial products, there's a natural tendency to think from a sector perspective, i.e. from a business or from an organizational perspective, and look at existing legislation that links to those sectors. So, and while that's really helpful, that organization perspective, that business perspective is really helpful to think about implementation, the consequences of what we develop in policy and the economic consequences. Those existing sectoral legislations are very rarely environmental policies themselves. Environmental legislation is much more about the goals and targets that I mentioned that we need to achieve for civil society, and focus on those goals and targets when we're making decisions about capital flows. This will also help with implementation by giving that confidence to uncertainty sectors and businesses and financial markets that are effective when they're going into implementation. So on more of the specifics on the science then, how do we make sure those environmental goals are articulated correctly from an investment perspective and at a level of detail that can be implemented? Essentially, how much of what type of contribution is needed from a given activity or sector. This is what we've been working on the platform, and it's what you see in the criteria that will appear in the various delegated acts of the taxonomy, the climate one, going through the co-decision process at the moment. So this is where we really focus on the science, and that becomes essential. And the science policy interface, when we're making policy decisions, becomes equally essential. That scientific basis for the taxonomy criteria or other policy decisions on how far and what type of intervention is needed to reach the EU's environmental goals in a timely way is itself a tool to prevent greenwashing. If we think about greenwashing as essentially, this sounds a bit accusatory, but essentially lying about a contribution, and the scientific basis is actually not enough in itself, because anyone can make a claim about anything if you're not able to substantiate it. So EU policies then, and the way we work with the taxonomy, needs to have that democratic transparency, coherence, and accountability built into that decision-making process as well, so that society can actually see how the policy links back to the scientific basis, and thus how an activity or any investment that's made is actually contributing to a given goal, i.e. to kind of explode the mechanism and say, right, this is what we're investing in, this is why, this is how far we're willing to go, and this is the basis for it. And this is all part of the building blocks of the strategy and the taxonomy itself. So in doing so, building in that transparency, we make policymakers and those wishing to claim sustainability, such as those financing the activities or businesses implementing the changes, accountable to those decisions. This makes greenwashing much harder to do in practice and much more obvious if it is actually taking place. The final thing I wanted to say on this topic is about independence. So understanding an independence is crucial in this whole process. Not everyone is a scientist, not everyone is a technical expert, not everyone's a financial expert. So being able to see that evidence or being able to see the mechanism doesn't mean it's necessarily accessible. So whilst having access to the underpinning evidence, the science is important, really important. Its communication to different audiences is also really important as well. So that scientific advice, that expert advice needs to be contextualized. It needs to be understood and have meaning in the real world to make it relatable to decision makers. A lot of the conversations I have in the platform with sectoral interests is about understanding why we're saying what we're saying, what it is we're saying in a scientific context from an environmental perspective as well. And I think that's where the science policy interface is the point in which understanding should happen, but it requires both the kind of research and technical side people to work with policymakers and the general public or civil society to make that process much, much clearer. There's often need to interpret evidence and scientific findings, and that's where the independent aspect comes into the process. It's why the independence of the platform, advising the Commission, making the recommendations to the Commission is crucial. So we don't actually set the criteria themselves, we give our recommendations on what those criteria should be from an independent and scientific basis, and then it's a political or Commission decision then to take those forwards and work with those in the policy making process. So to sum up, 3 brief points from my side. I think the focus on the environmental goals that need to be achieved is essential. So not getting sidetracked by existing regulation that linked to particular sectors, determine those actions needed to achieve those goals on the basis of clear, transparent scientific evidence through independent and objective advice, and then making that evidence and that decision-making process really accessible, understandable to decision makers and the public alike, which in turn makes those implementing of the decisions both credible, because they are making the right decisions, but also accountable and less likely to do greenwashing. Thank you.
Okay, thank you very much, Ben, for also bringing in some of the more bigger picture there about the definition of sustainability, and as well as the very detailed things you focus in your everyday technical work. I'd like to give the floor for one addition to Aleksandra, who mentioned that she had one very small addition to her talk.
Well, thank you very much, Andreas. Indeed, a small but important addition. Well, I just wanted also to add that coming back, to the minimum standard for ESG financial products. Well, I already, elaborated on how does it link with SFDR, etc. And I also wanted to mention that the Commission in its strategy did mention that they are planning to propose minimum sustainability requirements for financial products that can qualify under Article 8 of SFDR. But and this is great. Again, we are very supportive, but and we do acknowledge that Article 8 products are less well defined than Article 9 products. However, neither guarantees minimum sustainability performance of such products, and therefore we believe that more is needed than further defining here Article 8 products. But more importantly, we strongly believe that to fight against greenwashing, the Commission should go to the heart of the problem, which is that not all financial instruments have the same capacity to effectively allocate capital to the economy. Following the same logic, not all financial instruments have the same ability to finance the transition towards sustainability. Here, just to give you a very quick example.
Sorry, Aleksandra, can you really just make the point? And
So it's just to show that, for instance, actively managed tourism bonds meet the criteria to allocate capital to a sustainable economy. By contrast, it can be questioned to what extent passively managed funds, money market funds, structured products, or derivatives have such an ability. So yeah, that's just all what I wanted to add. Thank you.
Okay, thanks very much for the clarification. Then, Martin, do you want to react immediately? Also, perhaps 1 minute, 2 minutes maximum. Otherwise, I would open to the floor.
Yeah, I will be very quick. On Aleksandra's points, actually, the strategy is already very clear that we are now reflecting on whether the prudential treatment should be differentiated. We have asked the EPA, actually it was co-legislators who asked them to work on it, and the IOPA is also working on it. I think that the proposals on the solvency, you have made it clear. On the other point that Aleksandra mentioned on Article 8, Article 9 product, this is a very important issue, but a rather detailed issue. So I mean, not necessarily something that we can cover in this session. What I would like to say is here that the Commission accepted that we might have a gap here, and that's exactly what we said in the strategy, that we will work on this further. So I would certainly not be defensive on this point at all. On what Ben said, I think is really fundamental, and he mentioned, I mean, in his intervention, the word science. And I also clarified, how important it is for taxonomy to be credible, because it's really in the heart of our strategy, but then it has to be science-based. I would just add, obviously, and this is what we are asking the platform to do, that apart from science-based, that's really the job of the platform, is also to make sure that the criteria are usable and implementable. So I'm not saying that it is not the case, but we have to strike the right balance between science-based and the implementation challenges. And obviously, when you mentioned that ultimately, what you are doing is really the kind of core science work, but then it's for the Commission then, take this work forward, and then it's the responsibility of the Commission to make sure that the criteria are also politically acceptable. So, I mean, there is a kind of a triangle of three challenges: science-based, usable, and political acceptance, on which I think there might be more transparency needed for the sake of the project. So I fully acknowledge the point that you, Ben, emphasized. It is a very, very crucial point that would ultimately add to the credibility of the whole project. Thank you.
Okay, thank you very much for that. Then I'd open the floor to the discussants. I already have Said who wants to ask a question, and please also write in the chat if anybody else has.
Yeah, thank you, Andreas, and thank you to all speakers. So I'm Said El-Kadraoui, Special Advisor to FEPS on the Green Deal. I think it appears that somehow the Commission and all the stakeholders are now developing the different pieces of the puzzle to ensure that we can address greenwashing. I think that addressing greenwashing and requires that there is sufficient and high enough qualitative data available, so that people can start comparing, and in a way the combination of transparency and disclosure and the taxonomy can help to get us there. But of course, that is about the supply of products, but you also have the kind of the demand side, and many investors, of course, rely on third parties to make such an assessment, right? Can be rating agencies, for instance, or if you are a household, you go to your bank and you ask advice to your banker on where to invest your savings in, etc. And I'm just wondering if you look at from that perspective, if, for instance, on rating agencies and other actors that are important, let's say, in the market, if any additional regulation or guidance is needed, really to make sure that all this good data and the good work that you are doing, right, is used in a wise way, in a good way, to improve, let's say, the fight against greenwashing. So, any thoughts about that?
Thanks a lot for the question, Said. So about the intermediaries that use the data. Have anybody in mind whom you want to answer this, or?
No, I assume Martin, but maybe also the other speakers can have a right answer to that.
No, I mean, if I may, I certainly would be happy. Very quickly, the strategy is very clear on the need to take action in this area, not only in the credit ratings area. And we have committed in the strategy that the Commission will take action to ensure that relevant ESG risks are systematically captured in credit ratings and rating outlooks in a transparent manner, taking into account further assessment by ESMA. But I would even extend it beyond the credit ratings agencies. I mean, I think, Said, you mentioned the credit ratings, but they are also providers of sustainability ratings. And here we have identified several problems and issues when it comes to transparency and kind of at least some consistency in the approaches quite a bit. So we have also presented an action that we will certainly follow up in this field as well. Thank you.
Okay, then Aleksandra also has something, and then perhaps we have time for one more question if you want to write it in the chat, and otherwise we close afterwards. Please.
Yeah, indeed, I just wanted to say that as Finance Watch, we also strongly believe there is a need for a regulatory action on the ESG data rating and research providers. And that indeed, while also, of course, there is a strong need to include sustainability considerations into the credit rating agencies, but this is in a way a bit separate issue. And here, I think even the industry is actually, pointing out that there are conflicts of interest, insufficient transparency on the methodologies used, etc. And even when I was, preparing actually for this debate, indeed, even in the whole DSW case, I think there were also, some issues connected to the reliance on actually some external ESG rating providers, which had some, I don't know, specific methodology that was eventually not really fully reliable. So indeed, we strongly support here regulatory action to that end.
Thank you very much. So last question for Martin. In the chat that kind of relates to the global part of the renewed sustainable strategy, finance strategy, I'd say, which is, yes, how the EU standards fit into the global framework, and are there any efforts, for instance, at COP26 to make the EU benchmarks global standards? I think you already answered. No, there's a different answer in the chat.
No, I was elaborating on the previous question, just to give the precise wording of the strategy and send the link to the strategy. Thank you very much for the question, Julia. Well, we were very frustrated already 3 years ago about the fact that at the G20, there was nobody, no forum that would ultimately discuss how the different standards and taxonomies and labels and the disclosure standards could actually converge. So it was actually at our initiative, the Commission's initiative, the EU initiative, to gather all like-minded jurisdictions around one table and to create this so-called international platform on sustainable finance that now basically is going to celebrate the third year of its existence. And the purpose of this international platform was indeed to not only to identify who is doing what, but ultimately to converge and to identify common denominator so that it would facilitate the job of international investors and companies and financial market participants. Now, the world has changed, fortunately, and now we have the G20 working on sustainable finance in full speed. And the Commission is obviously working really very hard now to make sure that this work of the IPSF that we started is now channeled in a very prominent way into the G20 fora. If you are interested in more details, I will be more than happy to follow up. And indeed, we do have big plans for COP26, and especially at around time, we will publish additional reports on what we have achieved so far. I mean, I'm not saying it's enough. I mean, we are still not far enough. Let me be very clear. I mean, the challenge of international convergence is huge, but at least we have, I think, a good process and good basis already now. Thank you.
Thank you very much for that very detailed answer. Then last word goes to Ben.
I wasn't quite expecting the last word, but I just wanted to add to this, to what Martin said, and say at a more technical level, we're not focused solely on EU goals. So we're trying to make our criteria and the sustainability question future-proof in the sense they respond to international agreements and targets as well. So, and we know that sustainable finance, even with EU investors, is global in nature. So this should help with the EU standard fit into that global framework as it develops.
Okay, then thank you very much for that addition. And I'd like to thank all of you, to the presenters and people in the chat, participants asking questions, for your time and this very technical but interesting and important discussion that we had today. And you'll find the recording of this, if you want to go back to this presentation, soon uploaded on our website. And keep in touch and have a good rest of the day. Thanks a lot.
Thank you, Andreas.
Thank you very much. Bye-bye.